What's up, people? It's your boy Clement here, and I'm here with my buddy.
Ebenezer.
And we're coming to you from EBC Financial Solutions. Today, we are going to have one of our advice sessions. So, now what we do is if you need any financial advice, whether it's credit related, budget related, 401k related, mortgage related, car loans related, anything at all, you can send us a DM. We have our social media handles. You can send us an email, reach out to us, book a free consultation. We come up here and discuss these questions like this just so people can give comments and then we get to learn together because we're not experts. Nobody is, right? So we all get to learn together. So today, without wasting much time, let's dive into it.
What we got?
So, hello, please advise. Of course, we are going to advise. I had a personal loan I took some years ago. I was in a financial crisis at the time and needed the money to take care of things. Oh, too bad. It can be like that sometimes. I'm glad you had the capacity to take that loan though. Because sometimes when you're in a financial crisis,
You can't even do that.
you can't even get a loan. I guess if you had the job and the credit to get the loan, then cool. At least you had an option. I've worked so hard to pay it off now. Congratulations, I'm going debt free on that. However, I realized that my credit dropped a bit when I paid that loan off. It dropped by 10 points, which made me confused. I thought paying off debt is supposed to improve your credit score and not the other way around. Please clarify this for me. Say,
Deep.
I realized that my credit went down a bit when I paid it off. It dropped by 10 points, which made me confused. I'm kind of confused either because every time I paid off debt, my credit actually goes up. So you will be a good resource for this. I thought paying off debt is supposed to improve your credit score. I thought so too. And now the other way around. Please clarify. So she had a loan, paid that loan off. Instead of her credit going up,
It dropped.
it dropped instead. I think you've talked about that before. We didn't make an official video about it, but you did say that sometimes paying off certain loans can drop your credit score. So yeah, go ahead and shoot.
Yes. Yes. Paying off loans, personal loan, car loan, other type of loans can drop your credit score when you pay them off. It's kind of ridiculous, isn't it?
It is.
But it's the system. It's just how, because usually debt is not a good thing, right? And you manage to pay off your debt, but it drops your credit score instead. What the heck? But unfortunately, that's what it is. So I've had that on two instances. First of all, it doesn't apply to credit cards. If you pay, it's always recommended to pay your credit card off every time if you can. Always with credit cards, it will always go up if you pay it off, or not. It will not go down. It can only stay the same or go up if you pay off your credit cards. So that's different. But a loan, personal loan, a car loan, those loans are what that happens to. So when I first bought my Honda Civic, right, I paid off earlier than I was supposed to, and then when it reflected and they reported to the credit bureaus that I've paid it, because it was a closed account, it dropped my credit score temporarily. It's not going to drop too many, but it will drop. It will drop for a few points, probably like 10 points or something, depending.
She said 10 points.
Yeah, so that is what happened to my car, because it's an account that you have closed. You know, usually if you have different type of things on your credit, it's called credit mix. It's like you have a revolving credit, which will be for the credit card. You have an installment loan, which is the car loan and the personal loan. And so it all counts as your credit mix, and it helps you. It shows that, oh, you have multiple stuff you are dealing with, so you are kind of more responsible. But then when you close it, I mean, if you pay, they will close it. That's why it will report as closed account. And it doesn't look right. Oh, okay, so now you only have less. So temporarily, it will drop it when they report it. But then usually that don't worry about it. Recently, also the loan I took from American Express, I paid it off. The first one, I paid it off, and it dropped by 9 points, I think, on Experian. So I was like, but I kind of already knew it will happen before it will happen. So I think usually what I would say is that it's not a lot of points, but it can still hurt you because there are some dealerships, right, that classify credit scores differently. So there are some dealerships, if a credit score is 740 and up, is considered excellent.
Yeah.
But this other one may consider only 760 and up.
Yeah.
So usually 740, 60, 80, at least 760 is excellent, 760, 780. Even when my credit got to 785 on Experian, they were saying it's very good or something like that. But it's excellent in a lot of places, right? So sometimes 800 is considered excellent. But you want the best as possible. So because of that, you have to say this dealership considered only 760 and up, and you have 750, 760, and you pay a loan and they report on when you were going to apply for the loan, and they drop you down 9 points. Now you don't have the excellent credit again.
Yeah.
So that's gonna ding you. So any little thing, depending on the situation, can ding you, right? Or can hurt your score. But then ideally, except you didn't know, like me that I know right now, I'm gonna be having a car in a few weeks to months, right? But I know not to pay off my debt at that time, right? So that's the solution that I've come with for myself. So this one that has happened, it dropped me by in the next month or two. Going a lot of things. I'm going to pay off some stuff. It's going to break. You're going to say something?
I was just asking if it counts. Since you said temporary, does it recover by itself?
Yeah, I don't know if that same point is going to recover, but a lot of different things are. You just keep doing the same good things you are doing with your credit, and then it's going to recover eventually. So I have some cards that if I pay off, it's probably going to give me a few points and stuff. So the point by itself is going to recover. I don't know if the same point is going to come inside after some time, but it's definitely your credit is going to get better. But usually when you because it's an installment that you have removed from your credit report, and then other things, yes, it's temporarily going to ding you. But then if I was going to buy a car in this month or the next month, I wouldn't want to pay, because this loan I paid off quicker than I should have, right? So if you can control that, even if, let's say, you want to get a car this time, this is about to be your last payment. And for me, if you can, call your bank and tell them to hold off that payment. Or you want to pay, but they shouldn't report it.
Okay.
If you can do that, I would say do that. That I haven't done it before, so I can't say. But that's the solution that I've come up with. That if, let's say, this month or the next month, I'm going to get a car or whatever, I want the best possible credit. Because reporting the pay status is going to hurt my credit score. I will not pay it off this month.
Right.
Or I'll call the bank and see if they can move the payment date. Or I can pay, but they should not report it until this time.
Yeah.
That way, it doesn't report for you to drop points. And then, So that's, but yes, paying off loan, unfortunately.
Okay. Good stuff. So yeah, it's normal based on what you said. It never really happened to me. So, you said we learn something new every day.
Yeah.
So that's normal, but that shouldn't deter you from paying off your debts.
Always pay off.
It's always good to pay off your debt.
If you have the ability to.
The Bible clearly says the borrower is the slave to the lender.
Yeah.
Or a Proverbs, baby. I forgot the exact verse. But, so if you have the opportunity to pay off debt, it's always good to pay it, even if it's going to drop your credit by 10 points. But like he said, it's the closure. It counts it. So credit, nobody is sitting in a room calculating your credit score, right? It's a system.
It's a system, already said.
It all comes together to give you a score. So the system picks it up. Oh, an account is closed on your credit. So that's why I think
it will give you whatever attributes that they have to give you. Yeah.
But you're still debt free at the end of the day. That 10 points it's not gonna hurt you.
Yeah.
I'm sure based on what you're saying, you'll be able to do other things that will recover it.
Yeah.
And
It's just timing if you can this stuff. But yeah, I think this is a very simple one. And yes, I mean a lot of people don't know. You say you didn't know, so
Yeah.
that's what happens. You never even get loans. I mean you don't pay
Yeah.
attention probably because
I just use my signature line. of
yeah,
credit.
signature line of credit is good because of that.
Yeah.
That counts almost as a credit card
Yeah.
payment. So that's why when I took some, it dropped my score.
Oh, okay.
But
Yeah.
remember when I took some of
'Cause
my
that one, that's how it is.
I took like
When I paid off the credit
close to
bureau,
half or more than half, and because of that, I dropped the point because it's probably considered revolving credit,
Yeah,
the
right.
signature line. So it's not an actual. It's a loan, but it's not a loan.
Okay, cool. Yeah, so that's the advice we have for you, viewers. If this has happened to you, feel free to drop comments.
If you have more reasons why to, can I?
For our sister to learn, and for all of us to keep learning as well. We drop our social media handles and a link in the comments. If you have any questions, reach out to us. We'll do a video about it and get to advise ourselves. Thank you for watching. See you next time.
Thank you guys. You're going to see you. You did.